Hey, welcome back, traders. It's time for another GMU Extra. And in this episode, we're going to look at the high tight flag. Now, with the improved market conditions, you're starting to see a lot of chatter on FinTwit about high tight flags. People are seeing them everywhere, particularly off the bottom. So I've done some research and made a model book a number of years ago, 3 years ago, which covered high tight flags. And we studied 54 of them from 1915 to 2020. And I did this in conjunction with Logan Moss from Houston. So I thought I'd share some of that information to hopefully give you a little bit of edge when you're evaluating high tight flags. So let's just start with a definition. This comes out of How to Make Money in Stocks by William O'Neill, page 131. A high tight flag price pattern is rare, occurring in no more than a few stocks during a bull market. It begins with a stock moving generally 100 to 120% in a very short period of time, 4 to 8 weeks. It then corrects sideways no more than 10 to 25%, usually in 3, 4, or 5 weeks. This is the strongest of patterns, but it's also very risky and it's difficult to interpret correctly. So the importance are the underlined the underlying portions of that last sentence, which are my emphasis. It's a strong pattern, but it's tricky. And we want to make sure that we can evaluate it properly, because the attraction of a high tight flag is fast gains. So they can fail frequently on the first attempt. So you might have to try for a high tight flag entry 2 or 3 times. So here's some insights from the research I did. You won't find this in How to Make Money in Stocks, but they are some characteristics to give you some edge and improve your odds. So the first thing I wanted to make you aware of is 54% of the high tight flags had a dormancy period for a minimum of 9 months before breaking out to start the pull. And the average gain from those high tight flags was 360%. So when a stock is in a long dormancy, it's in a base, it breaks out of the base, you'll notice that this correspondingly overhead supply pie chart. Only 10% of some of the very best high tight flags had overhead supply of any meaning. So that's important. Many of them are moving to new all-time highs. Number 2, there's typically, on average, a 12-week run-up prior to the poll's breakout, averaging 88% gain, signaling strength. It's a pretty big run-up, even before you have the high tight flag breakout. Many of them are first stage patterns. The study showed 63% were first stage. Many were second stage. Again, all-time highs or lifetime highs. 80% of the study had high tight flags that were at all-time highs. So that's an important statistic. And 67% of these high tight flags exhibited volume dry up in the flag formation, and they went on to even bigger gains, averaging 380%. So let's look at some charts, and we'll start at the beginning. This is Bethlehem Steel from 1915. On the right side, you'll see this long dormancy period over a year, year and a half, where Bethlehem Steel was not moving. Then we had this explosive move higher, and it ran up excessively and formed a high tight flag in 6 weeks. You can see the flag right there. Now you'll also notice, when we look at the daily chart on the right, this was a gain of 191% for the poll in 5 weeks, and the flag was another 5 weeks with a 19% correction. You can see here, after only 2 or 3 weeks, that the breakout tried to happen, but it reversed and it failed. I mentioned these can be very tricky at times, and there usually is at least one fake out. You can see the second breakout here was very successful, and then you could actually have added, and the stock went on an extended run. So here's FANWA from 2017. The noteworthy points in this one are, again, a long dormancy period. This stock was doing nothing at all for 2 years. And you can see on the daily chart, there's hardly any price movement at all. And then you get this explosive move higher, in this case, 85% in 8 weeks. And the flag gets very, very tight and controlled. It only corrects 10% in 3 weeks. You'll notice it's very tight in the flag. That's very, very constructive. And most importantly, if you look on the weekly high tight flag here, very tight action, and look at the volume dry up. Here's an extreme case of volume dry up in flag, which is very constructive, way below normal. That's telling you the activity is really, really tight, and there's not a lot of noise in the pattern. Moving on, this is AMD from 2018. Some similar characteristics. Again, long dormancy period for AMD, almost 2 years. Now you'll notice that this one, the pole, actually starts out of the base. It's in the base and then moves out of the base and forms the flag just above the pivot point of this long consolidation. It was a strong move, over 80% in 9 weeks, with only a 16% correction. And you can see here on the daily chart, look at the extreme volume dry up compared to the accumulation in the blue spikes on the way up. Very constructive. So we want to keep noting that. And we also like high tight flags from long dormant periods, which go to all-time highs. Here's one you may remember. This is Tesla from 2013. Now in 2013, Tesla, which had come public a few years earlier, was forming a long IPO digestion period of years. You can see it on this weekly chart on the right, long dormancy. And then we had this explosive move. Look at the change in the volume on the run up in the pole. Multiple weeks up and very, very explosive. Every point on the way up was a new all-time high. So this was powerful and very rare power, 185% gain in 8 weeks, and then a flag that was only 4 weeks long with a 23% correction. Now, what's interesting about Tesla are two things. One, even the flag, you can see that the initial breakout of the flag actually had a very sharp shakeout, which, depending on where you bought, you could have been shaken out of this pattern here and been stopped out. But it did reverse and then continued. So they're tricky. Now, the second thing that's important is noteworthy on this one from some of the work that I'm doing is it's very similar statistics to a high tight flag that might be forming in the current market. And we're going to look at that in a moment. So we're going to look at two potential high tight flags and try to compare and contrast them in 2023. And then we're going to look at how we might be able to use precedents to help us with high tight flags. This is Supermicro Computer, a very hot stock in the market right now. Now, there's a number of noteworthy things about this particular stock. One, it does have a long dormancy period for 18 to 24 months. So we like to see that. Now, you notice that this stock, and I've shaded it in green, during the bear market, Supermicro tried to make a move and break out, but it really couldn't because of the weight of the market. You can see it would break out and it formed these kind of bases on base. It was just grinding its way higher. And in fact, it was very difficult to hold because these corrections would have knocked you out of the stock each and every time. So it could have been very, very frustrating, but the stock was trying to show that it had some leadership characteristics. And you'll notice that when it finally got going, when the market weight of the market had been relieved, the stock screamed higher. Look at the RS line ripping higher when we finally got a rally started in the market. You'll notice again, new all-time highs in this powerful move. So how powerful was it? Well, it was 190% gain in 6 weeks and a flag correcting 22% so far. And we were 3 weeks into the flag, and this pattern is still evolving. But look at the power. It gapped out of the consolidation showing power. Then it gapped again with a continuation gap. So very, very powerful. These statistics very similar to the 2013 Tesla high tight flag. Now, I put the fundamental block down here because you can see there's some very strong fundamentals, even in the bear market. So this is a strong stock. They're in a good group. They are involved with efficient green cloud computing. They have low-cost server and modular solutions, which incorporate artificial intelligence applications. Now, they had this really abnormal quarter for the period closing in March of 2023. But probably more important is the rest of the year looks very strong for this company. Its 2023 estimates were very strong. So this might have been just simply an anomaly. So try to capture the characteristics of this potential high type flag. And we're going to look at one other. This is Marvel technology. So this one, if we look at this one here, on the right is the weekly chart. You can see that this has a high type flag, but you'll notice that we're not forming all-time highs. We're still way down in this kind of bottoming base. So if we go to the daily, it's very powerful. It's actually a 90% gain in 5 weeks. And the flag currently is a 19% correction, and we're starting week 6. Now I highlighted 6 in red. The best high type flags, the flag period is usually 3, 4, or 5 weeks. So if this were to continue sideways, 6, 7, 8 weeks, it might perform just a simple consolidation and not be a high type flag. It has to evolve. But it was a powerful gap and a powerful gain. But not hitting all-time highs, I think, is a flaw. I also think it's a bottoming base with a lot of overhead supply, which I think is a second flaw. We have to watch the flag. This might be a flawed flag. But also, the data block for this company is flawed. You can see right now that it shows almost 4 quarters of decelerating earnings and sales. That's not good. And when you look at the estimates for 2024, they are actually very poor estimates. So either the street has not caught up to what the future is for this company, but they certainly are with the price action, but the estimates haven't caught up, or it's definitely a head scratcher to see this kind of deceleration and this kind of price action. So there are some flaws in this one. You can see how this potential high type flag is just completely different in characteristics compared to Supermicro. Now let's look at some precedents. Now, here's the very rare 2 high type flags all in one move, a model book stock. Axon Enterprises, which is the former Taser in the 03-04 period, had multiple high type flags. It was extremely powerful stock. You'll notice that from the initial breakout, the stock rides the red 10-week moving average the whole way up until it finally has a blow off top. Powerful run in only 39 weeks, multiple stock splits. Now, that was in 03-04. In 98 to 2000, we had JDS Uniphase. Now, this was a fiber optic connector laying a lot of the rail tracks for the internet. So it was in the right group laying a lot of infrastructure for the internet. And it actually is now called Viavi. But again, powerful move. You can see the steady accumulation for over a year before it got into the 99 period, which was a really, really strong period for the market. And it formed 2 high type flags before hitting a climax run and then blowing off at the top. Again, rides the red 10-week moving average, containing the move the whole way up of 66 weeks, multiple stock splits. These 2 could have been precedents for fiber in 2020. With the COVID bear market and some of the dynamics, fiber had a very, very strong breakout and actually formed, after its first small correction, formed a high type flag, moved up again, and formed another high type flag. Rare and powerful, and you eventually had a climax run and a final blow off top. 43 weeks, it was a fast move, but if you were paying attention, you really could have gotten a lot out of fiber. So these are important things to kind of make note of and study. Study again, the 10-week line contained that whole move, and these could be precedents for potential future moves. So they're worth studying. Now you can look at IPO patterns from initial public offerings as precedents for themselves in other IPOs. Now, it's a little bit of art to this, but when you're looking at an IPO, the offering price, when we look at the poll, we try to calculate the poll as being from the offering price of 26 all the way up until its initial move. Now, these are weekly charts, but you'll notice that Google in 2004 was offered at 85. Within a couple of days of that move was up around 115, very strong move, and formed these very short U-turns, little short bases, before they had a very explosive move higher. these little U-turns fit some of the characteristics of a flag. They're pretty short in nature, 3 to 5 weeks, and only a small correction. Here's Twitter, very strong flagpole, short flag, and got a 50% move in 2013. And GoPro in 2014 also could have been using the Twitter as a precedent for a strong move and a short consolidation before a nice 100% move higher. They're a little trickier to interpret, but I wanted to bring it to your attention that if we're in a bull market with new emerging merchandise, you could look for this potentially in new IPOs if we have more in the coming 12 to 24 months. Now, we've covered a lot of ground on high tight flags, and some of the characteristics, I think, hopefully you'll find these as being helpful information to provide some edge in evaluating high tight flags and trying to find the very best patterns. They can be tricky. They can fake you out with usually one false breakout, but if you get it right, it can be very, very rewarding. So that's all we have on high tight flags. I look forward to the next GMU Extra.